Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're taking a look at the currency pair euro-dollar. Pretty much the most important currency pair in the world. And as you can see here, I've got it on 1 day candles. So we're looking at how the pair has traded over the last couple of months, or pretty much the last like 2.5 quarters. And you can see it's actually been pretty range bound, to be honest. Like, we've got lows in the 116s and then highs around 123. And to be honest, since the end of last year, the very start of this year, we seem to have consolidated even more within this sort of more recent range. Like, more specifically, if you look at right at the back end of March, we bounced at the 117 level. And a couple of weeks ago, towards the end of last month, we struggled to get beyond 122.50. That was quite a decent bounce still though, like that's like a 550 pip bounce. Since, the last couple of weeks, that upside momentum has seemed to fade. We have kind of been going sideways, or to be fair, I've traced this, very gradual descending trend channel that euro-dollar seems to be locked within at the moment. And if you also look at the pair in terms of its proximity to its 21-day moving average, which is here in orange, its 50-day moving average, which is here in blue, and its 200-day moving average, which is here in green, it's pretty close to all of them, really, isn't it? I mean, it's still a little bit above the 200 DMA, but it kind of suggests, technically speaking, that we're in consolidation. So yeah, I mean, from a technical perspective, for the meantime, I expect the pair, as long as there aren't any big fundamental catalysts that come in play and completely shake everything up, we'll talk about that in a second, I expect we probably will see in the near term a continuation of this gradual trend to the downside, but then perhaps we will find some support at this 200 DMA, which is in the, it's above 120. I don't see any reason really why we should fall below 120 for now. Obviously, a couple of weeks ago, 120 was quite a good level of support. Probably will continue to be. And if that does happen, if we do sort of bounce at the 200 DMA, then we'll probably maybe get a bit of a break above this descending trend channel, and then eventually we could, if the ranges are respected, move back to this recent high and test it. And then potentially, if things start getting a bit more bullish, maybe a test of the, when is that high from? That high is from, the 6th of January, the annual high in the mid 120-300s. So in terms of fundamentals then, what has been going on? Well, we've actually got a key event today. As far as the dollar is concerned, we've got the FOMC rate decision. Now, markets, it's going to be an interesting rate decision, but there are no massive or decent policy changes expected, which is why there's probably not going to be too much volatility. So that's a bit disappointing for the traders, but for the economists, it is going to be an interesting meeting because we get new economic forecasts, and potentially we get to learn more about where the Fed sits on this QE tapering discussion, which is going to be the next big policy change. At the moment, markets expect that the Fed will announce that they're going to move towards tapering their QE bond buying at the end of this year, or potentially they're going to make that announcement at the beginning of next year. Not yet, still far too early. What we're potentially expecting from the Fed is that Powell in the press conference, or maybe in the statement, they'll kind of say that they're talking about tapering. That's kind of where we're at the moment. But yeah, everything else, like the 120 billion in bonds that the Fed is buying each month, interest rates, that's all going to be left unchanged. So yeah, from that perspective, not going to be the most interesting Fed meeting. But yeah, updated economic forecasts they should upgrade their GDP forecast potentially, definitely should upgrade the inflation forecast after we've had those two very, very strong inflation reports in the last 2 months in the US. Although very much expect that not to be interpreted as a hawkish development from the central bank, because the Fed is probably going to strongly maintain its argument that it sees inflation this year as transitory. So inflation this year will be high, but it will come back to acceptable levels next year and beyond. So don't expect much of a market reaction to that. And then finally, on the economic forecast, there's going to be new forecasts on unemployment, which will probably not be changed. That seems to be the consensus amongst economists, because obviously the last two jobs reports for the months of May and April weren't, I mean, they weren't bad, but they weren't as good as people were expecting them to be a couple of months ago. So yeah, Fed meeting probably not going to have too much of an impact on the dollar. I mean, the big thing would be if the Fed signaled now that it's going to start moving towards tapering, because that would be like 6 months earlier than expected. And then I presume you would probably, let's get rid of this arrow, you'd probably see pretty decent dollar strength and potentially a break below this 200 DMA and a move towards that 120 level. But yeah, guys, hope you enjoyed the video, and I will see you all in the next one.